Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Wednesday, January 14th, and my name is Raleigh White, and I'm coming to you live from a beautiful sunny day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a focus on the importance of data analysis. And on the agenda for today, he's going to start by giving us a midday market analysis and what his top watch list stocks are. And then he's going to talk about key upcoming earnings news and projected moves for those stocks. He's also going to tell us why time spreads are great for trading earnings, how he uses the data miner to select stocks that are not overextended, and also how he uses seasonality and technicals for swing trade option selection. And we also have a special guest joining us for a second day. Jeff Smith's going to be here to share with us a new tool that he's been working on that's pretty darn exciting. Now, if you have any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also remember, folks, I have opened the chat to everyone. And remember that we do have some ground rules. Number one, always be kind and supportive in your posting. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. And number four, please keep your side conversations to a minimum so that the rest of us can focus on the education and the information that Roger is going to be sharing. Because after all, folks, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, for those of you that joined us this morning at 8 o'clock for Roger's pre-market briefing, we noted that there were several key catalysts that we needed to be aware of. In the tech sector, we noted that PanW and Fortinet were both down 2% coming into the open. On the consumer front, we noted that Netflix was up 1%, but Warner Brothers was down 1%. In the finance sector, we were looking at earnings being released before market open from Bank of America, Citigroup, and Wells Fargo. On the international front, we noted that the Nikkei closed up 1.5% and set a new record high, giving us a bit of a tailwind coming into the markets. On the Fed front, a lot of activity going on. First of all, we had delayed reports being released on the PPI, Producer Price Index, retail sales, and business inventories. And Roger wasn't really concerned that this was going to have any impact because these are delayed reports. They're from November. And with the CPI report being released yesterday, he thought there would be a muted response. However, as far as new reports are concerned, home sales data was coming out. We had crude oil inventories coming out. We have the Beige Book being released, and we have five FOMC member speakers talking today. Now, once again, for those of you that are just wondering why do we even focus on these catalysts, well, it's pretty straightforward. Roger believes that if there is information that is either known because it was released overnight or will become known during today's trading session, but is not yet priced into the market, these are volatility flashpoints that we need to be aware of as we consider potentially trading stocks in and around these volatility flashpoints. Now, as far as Roger's large cap pre-market stock watch list is concerned, we note that there were 19 tickers that he is looking at. On the short side, we had PayPal, CPB, Snow, ACHC, DT, MNDY, STAA, AMBA, and NT Netgear, NTGR. And as the longs, we had 10 longs here. You can read them for yourselves, but I did put an asterisk by NASDAQ, NDAQ, because in Roger's opinion, this was a great looking A line that was setting up. Now, one thing I need to share with you about these large cap stocks is that when Roger puts these on a watch list, that means that according to some of his selection criteria, these are setting up as potential tickers that he wants to place a trade with. Doesn't mean they're ready for prime time, but they're getting there. And for those of you that were with us this morning and you watch how he goes through each one of these tickers, he brings up the chart and tells us a quick story as to what he's seeing and what he hopes for. That's very, very valuable. So he does that pre-market. In the middle of the day, so today during the VIP session, he'll give us an update as to what he's looking at. And then typically towards the end of the day before the market closes, he's looking to narrow that selection process down, potential trades he might want to swing and trade overnight. So that is his process. And once again, I encourage you all to be with us in the morning as he goes through that process. So it'll be interesting to find out which of these stocks are remaining on his midday report and what new stocks he's added to that. And as far as his pre-market comments were concerned, well, when we opened the room at 8 o'clock, we noted that the futures markets were pretty much down across the board into the open. We noted that the put to call ratio was a bit skewed on the call front, basically just being a little bit ahead of themselves with calls leading the way down in that range. We also noted that the VIX continues its 5-day rise. So the VIX was up somewhat sharply this morning, just at about 17, and that's something to keep an eye on, a little bit of a red flag. He also pointed out that most of those major indexes are consolidating above major support, and they've been doing that for the past several days. They don't seem to have the momentum to break out and generate new all-time highs, because let's face it, they're at all-time highs or just about, and they're not basically receding below that area. They're just kind of stuck there. He did say that he did see that he sees that momentum is cooling a bit as 450 stocks moved to 299 at 20-day highs. What I mean by that is that when we looked at stocks yesterday, okay, there were 440 that were making 20-day highs. And today that number was 299. And Roger predicted this was going to happen because as the number of stocks making 20-day highs approaches 450 and 500, typically the market tends to cool. And that's in fact what we're seeing. He also said that from his perspective, he was basically going to be leaning a bit more towards short opportunities. Okay. Or if he takes a long, it would be on those stocks that have already based out. In other words, they had already retraced back to a level of consolidation for them to continue going higher. And then he talked about crypto, gold, and silver, and particularly in gold and silver. Pretty interesting there. He told us about something that he calls a doji sandwich, which you basically see in gold and silver. And that portends that both of those commodities are set to go ahead and move higher. Bottom line, he said, folks, once again, let's remain cautious. The markets tend to be cooling a lit. They're a tad overextended, which is not a bad thing. And he expects there to be a healthy retracement. Now, we're not talking about a major crash or market correction. He's just talking about a retracement back into key areas of support, which would then bounce off those areas of support and enable or allow us to consider being more aggressive, taking some longs in the market. So, we have a great group of people joining us here. We always do for these VIP sessions. And Roger and Matt and I are delighted that you are here. And we're excited because we got a really nice agenda today, with a continuing focus on data analysis and the importance of data analysis. So today, Roger's going to start by giving us a midday market analysis, as he always does. And he's going to share with us those top stocks that are on his watch list. That's an update from what he shared with us this morning. He's also going to talk a little bit about, those key stocks that have upcoming earnings and potentially what their projected moves are, because we are right at the beginning of the earnings season and we can see the financials have been leading the way. He's also going to share why time spreads are great for trading earnings and why that is. He's going to show us how the data miner selects stocks that are not overextended. And he's also going to talk about how using seasonality combined with technicals is a great way to look for the best options for swing trades. And we do have a special guest. He is going to be, Jeff Smith is going to be joining us again. He joined us yesterday. He's going to come back today and talk a little bit about some pretty cool tools that he is developing that he'll be formally introducing this weekend. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we will address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone and we do have some ground rules. Always be kind and supportive in your post. Number 2, keep to the topic. Number 3, no political discussions allowed whatsoever. And also keep your side conversations to a minimum so that the rest of us can focus on the education and the information that Roger's going to be sharing because, after all, folks, he's here to give us an edge in the market and to help us become much more confident and consistent in our trading activities. And with that, guys, let's say hi to Matt. Let's say hi to Roger. Guys, great to see you here. Happy hump day. Happy Wednesday to you.
Happy hump. That's right. It is Wednesday today, isn't it?
I
I
know, man, the days are moving fast, Roger.
they are moving really, really fast. And hello everybody on YouTube, by the way. We got a lot of people here as well. Good
Uh,
good day, everybody. Hope everybody's doing great. Happy hump day. We're about to get into a cold weather advisory here. We're about to get into the 40s tonight and
oh my
tomorrow.
gosh, Roger. Well, that's where we are here in Austin. So, and it's crisp and cool, and but there's still bright sunshine outside, so it's pretty nice.
Nice to hear that. All right.
You know what's
Um,
kind of interesting, Roger? I
yes.
was going to ask you about surprises, and I'll share with you a couple of things that sort of surprised me and be interested in your thoughts. And looking at the charts today, what was interesting is we see a divergence. I mean, we see TLT, the bonds, basically moving above yesterday's high and the pre-market high, but the SPY and the QQQ are having nothing to do with
Yeah.
it. And I'm just wondering if that's just, a flight to safety move, which is driving bonds. Uh, Hard to
Yes.
say.
Yes. Well, consumer staples are really strong today. Really, really, really strong today. So, in my opinion, this is definitely, we're starting to see some flight to quality.
Okay.
Which, by the way, as I've said to you yesterday here, uh, I think I've said it in about a million different words. Uh, we are going back to the 8-day EMA. We need to pull back. Stocks are overextended. They're overextended. You remember
Right.
yesterday I was telling you here, and then I posted something in the VIP room right at 3:30. It's like I don't like the price action. Sometimes when I look at the price action like we did here, and I find that all the stocks that looked good are now 1.5 standard deviation away from the 8-day EMA. And we're going to talk about that today because I use that criteria for the data miner software. It's the same criteria that I was using with you guys yesterday to determine whether markets were overextended or not in the
Right.
short term. And remember what I said? I said, I don't believe we're looking for a major downside move here. I just think we need to cool off a little bit.
Yeah, and then it would be healthy for that to happen, especially if we
Yes.
want things to come back. The other thing that I noted that was interesting was this, Roger. I was keeping an eye on crude oil because I mean I day trade, so I'm looking at crude oil, and I noticed that pricing is just remaining level right above almost at $62. And so I was interested to see what the inventory report would come out. Well, the inventory report shows like 3.5 million more barrels in inventory than anticipated, and the price of the commodity didn't move whatsoever. So, I mean, once again, we tend to think about why things are happening, but I'm wondering if some of the saber handling in the Middle East with Iran and things of that nature has futures traders wondering about potential supply impact in the Middle East. Anyway, there's these things that I normally see work together, but they're not working together, and that happens.
There's a lot of stuff going on right now. You've got the whole right, as Mike just said right now, a second ago, geopolitical stuff. That's exactly right. You've got geopolitical stuff, and you've got bank earnings are starting to come out softer than expected. That's a red flag right there. Big red flag right there. So I genuinely believe, I genuinely, in good faith, believe that that the markets just got a little bit ahead of themselves.
Okay.
Sometimes people try to ask why, and sometimes the answer is just as simple as we're getting a little far ahead of itself. Look, the market has this rhythm. Okay, I'm going to show you guys here. Let me share my screenshot.
Great.
Now, look, it took me years and years and years to figure all this stuff intuitively so that you don't have to. But you see these dotted lines here? I don't keep them here for my health. Okay. So anytime price gets close to the bottom or the upper end, we tend to go back the other way. Look, now I didn't come up with this. So don't argue with me if you don't agree with it or if you don't like it, but it's just how it is. Now, I could give you a million reasons why it happens. Okay. I could tell you a million reasons why it happens. The problem is, I can't prove it. Okay. I can't prove it. One second, I got to add to a position real quick. One second.
Sure, no problem whatsoever.
One second. It'll just take a second.
And I agree with you. I mean, once again, as traders, we tend to look for confirmations. We tend to look for one-to-one, relationships between things that are happening, and it doesn't always happen that way. There can be delayed responses and other things that are impacting things, and can't always discount the fact that algorithmic trading bots are also driving a lot of volume, and they're triggered by keywords. But it was just interesting to me, at least, once I was seeing these divergence in the market. But I agree with you completely, Roger, that things are a little toppy.
Yeah,
They're a
they're
little
just
overextended. I like the way you say it, a little full of themselves.
yeah, just
They-
a little. Yeah, you get a little overextended, and I think what it is now. Again, I could try to explain. Like I could do right now what a gazillion um, traders and market analysts will do and try to justify and explain things to you and give you their. I can do that. I can do that for the next 3 hours. I can explain to you how. I can explain to you how there's a rubber like there's VWAPs here and all that, and I can explain to you how I could do all that. But the problem is, I don't know if that it happens to be true. That's the problem. I don't know if it's true. I can't prove it to you. Um, so I'm not going to say it, but I will tell you this: whenever we get 1.5 standard deviation from the 8-day EMA, we tend to start cooling off.
right.
And the important thing is excuse me. The important thing is the market tends to behave that way. It's got a rhythmic sense to it, and that's what I programmed. That's what I programmed into the software. I programmed that into our software so that we can into data miner. I literally programmed every possible scenario of how this can get overextended, and when it gets overextended, it gets to this area, it won't let you place trades. Okay, it won't let you play. It won't give you an option. Okay, and we'll go over that today. We'll do a little walkthrough in a few minutes on that. Okay.
That's great.
Yeah.
And it's true, Roger. What you're saying is absolutely technically true. All you have to do is just look back in time, pick any stock or whatnot, and it's like a rubber band effect. It
It's like a
comes up.
rubber band effect. Now,
Yeah.
does it always work 100%? And actually, it doesn't work as well on individual. It works on individual stocks too, but it works much better on the broad market because the market can't get too ahead of itself. You got too many stocks. So the market is a better way to gauge that. I use it on individual stocks, but on individual stocks, sometimes I'll go up to two ATR, but on the index, it's about 1.5. Okay. Now let's talk about the broad market. I'm in a high flyers trade right now, and I'm looking to add to the position.
Okay.
And usually they don't trigger. Usually they don't trigger in the middle of the day, but in this case, the stock triggered in the middle of the day. So it's one of those.
Yeah, normally it's in the first couple of hours.
Yeah, this one is like late to the party. Gave us it went up, and then it pulled one of these. So here, I'll show you the stock. You could see it right here. I'm looking at it right here. This is the stock we're day trading right now.
Okay. Yep, I see the U or the V.
Yeah. All right. Yeah.
High Roller Technologies. There you go.
Yeah, high roller technologies, the gambling. We're gambling with a gambling stock, which is halted right now. We're waiting for it to reopen. We're
Okay.
waiting for it to reopen. All right. All right. Okay. And I just got to check one more thing here real quick. Yeah. Okay. Never mind. Forget it. Sorry about that. Okay. So let's go back to the market. Oh, so here's what I wanted to show you. Here's what I wanted to show you. So remember we were looking at this all together and I was explaining to you how we have too many stocks
Hmm.
breaking up. So look at that. We're 440 coming into yesterday. 299, 299 coming into today. And right now we're at 345. So momentum is not that bad right now.
Right.
It's not that bad right now. Just letting you know. The upside is not that bad. It's just there's a lot of stocks that are overextended. I think honestly, this is just a rebalancing that we really needed because we were kind of moving a little bit too far ahead of itself. And I think that's really what it is. That's really, really what it is. All right. So let's talk a little bit about our stocks for today. Let me show you stocks that are on my watch list. Okay. Send out a little quick note here. Okay. 1 second.
And
All
I
right.
was sharing with people today, Roger, during the opening preamble that, when you look at stocks, you have your morning list. It's refined at midday, and then you continue to narrow that watch list down as the day winds down, looking for opportunities to swing overnight. It's like a funnel
Exactly.
that
That's
you go
exactly.
through. And people need to understand that.
Exactly. And I just need to check one last thing and we're good to go. All right. I just wanted to give them my profit target and my stop loss. Okay. We're good to go here. All right. Now another stock triggered. It's like Murphy's Law, Raleigh. How many times has this happened to us
On the high flyers?
on high flyers that they
Yeah.
trigger like at 12:16 in the afternoon? It's I'm telling you, it's craziness today, you know? It's
They
just
were they were waiting for you to be distracted. That's what they're looking
exactly,
for.
exactly,
They're
exactly.
stealthy that way.
All right. Let's see what we can get. But here's the good thing. I've already put our profit targets and our stop losses in place on both trades. So now it's just a matter of seeing what happens, you know? Okay. So let me show you guys. Momentum levels are looking good. Stocks are not looking that bad. The markets are actually looking very stable right now. They're not looking too bad. We haven't broke completely. We haven't broken completely below the 8 day. We're still sitting on here. If we bottom out right here, it would make sense for us to bottom out real quickly and then start coming really quickly, coming right up. And we do have Fed data later in the week. So I wouldn't get too bearish just yet. Remember, we're within a few points, literally a few points of all-time highs. Don't crap out just yet on this market, okay? It's just we're not in that kind of a market. We're in a much more stable market right now. And also, um, typically, this Middle East news doesn't tend to last that long. It tends to, you know how it is, Raleigh. It's very, 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 very quickly. Now, overall, we look at the overall market, and we can just start here. If you look here, you'll see that RSP, that's the equal weighted SPY, hasn't even moved. We're still above the 8 day EMA here.
Right.
Not a major issue here at all. Okay. No, look at that. We haven't even violated the 8 day. Now, if you look at SMH, you'll see that we're just sitting at the 8 day. Okay. So I wouldn't make too much out of the current situation. I wouldn't say like we're falling apart, the market's really breaking down. Um, I wouldn't do that at all here. Okay. I would just kind of take it one step at a time. Markets are stable. We're having one bad day after making an all-time high on SMH. Not that bad. If you look at the mags right now, you will see though that we're breaking the 100-day moving average. That's not good. But again, this is the mega caps. Uh, Mega caps are, are there's only 7 stocks here, but they do have a large percentage. But they do have a large percentage of the market. Okay, so let me show you stocks that I'm currently looking at. Okay, these are my short stocks. MNDY. Nice compression to the short side, breaking down. You know what? Let me move this here and use my TC 2000. Okay. Let me move this. MNDY. That's our first stock to the short side. You could see it right here. There's your VWAP coming down right here. Nice compression. Very, very nice. No, nothing bad here. I closed my chat, folks. So if you have any questions, just ask Raleigh and he'll ask me, okay? Um, the next one is SMCI right here. SMCI. Nice little breakdown right there. Still breaking down, still weak. Now think about this. I'm showing you the weakest chip stocks. If you feel
Right.
the market has more downside to go, what stocks do you think are going to break down first? It's going to be these chip stocks every day and twice on Sunday. Okay. You need to understand that. All right. CPNG. CPNG. Nice breakdown. Real nice breakdown here. Look at that on the daily. High volume candles. Real nice break. I like what I'm seeing here. Really like what I'm seeing here. ARM. All right. We just got out. 1 second. We took a profit on SEGG. So profit target met at 125 on SEGG. So let me just show you real quick. We got into this stock right here just now, around here, and got out right over here at 125. Okay. Sorry, folks. I was a little distracted, and we're in one more. And the stock that we're in right now is halted. It's this stock right here, ROL. I don't usually do this live, but I figure since we're in, it, might as well, right, Raleigh? Have a little
Oh,
fun.
yeah.
It's this
Why
stock right
not?
here. It was halted and it got halted again. Okay.
So we've got a gambling stock and a lottery stock.
Listen, listen. Look at me. On one hand, I'm dealing with like the most conservative stocks, and on the other hand, I'm dealing with this. Listen, man, there's money to be made in these small cap stocks. They have no correlation to the broad market. We just have to be really strict and systematic about it, which is exactly what I'm doing. Let me show you just real quick. You could see how strict I am. So look at the instructions today. Re-enter at 112 on a buy stop. So we got stopped out here, right? I'm like, no, re-enter when it goes a little higher. Put a limit order on this stock. You should be long HMA now. Make sure your stop loss is set. Stopped out of HM. ROL alert has triggered. Put a stop loss at 1550 and a buy stop at 26. I'm giving people, we are now long SCGG again from earlier. Stop loss 90 cents. This is what I was doing, folks, while I was meeting with you guys here in real time. This is what I was doing. Okay. Just FYI. All right. Now, some of you got out at 130. All right. That's it. Now we have to wait for this stock to reopen, which is another 10 minutes. It just got double halted. It halts for 10 minutes. So we'll see what happens. All right. Good. I like starting out with a nice profit in the morning.
Yeah,
All right.
it's a great way to
Hey,
start the
Raleigh,
morning.
I don't have the chat open, but did anybody join me in those trades?
Yeah, absolutely, absolutely. They're talking. They're aware of the halts and it reopened, and so people got out very quickly on Sedge,
Nice.
made some quick money on that.
Good. Good, 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 good. All right. I like when a plan comes together.
Oh yeah,
All right. Next one is snow. It's snowing. It's snowing. I really like this stock for a short. It doesn't have a lot of volume today, but it's a nice looking stock. The key with these small caps is you got to be really disciplined. D-Dog. Look at the dog. But you're right. I didn't even think about it. One is a gambling stock.
Chuck, and
One
the other's
is
a lottery stock. It's just we're
we're in
in
good company.
Vegas. We're
Yeah,
in
we're in Vegas.
Vegas.
Hey, listen, when all right, all right. So D-Dog, I like D-Dog. I got to tell you, I have so much fun doing this with you guys. Like it's a lot of fun. It's a lot of fun. DT. Another short. Look how tight Look look at this price action, okay? Look how almost no bars overlap other bars. It goes, breaks down today. It goes to the VWAP. What does it do when it hits the VWAP? It starts coming right down again.
Mhm.
That's a low risk trade right here because if it breaks the VWAP above, you could get out right here.
Mhm.
That's a nice low risk trade
Is
right there.
that V pattern you like?
Yeah, it's right
Yep.
here.
Yep.
It's what I keep showing people this pattern all the time. Here. So here. That's your resistance area, right? Right here. Look.
Yep.
Oops, right here, and there's your profit target right here. See how it came up here and now it's coming down? So
Hmm.
it's right here right now.
Right there.
That's
Yep.
your entry right here. And if it goes right, so your trade, look at it here. Your risk is right here. Your profit is from here to here.
Yep.
Look at your
Pretty.
risk.
Yep. Nice ratio.
So let me delete this for folks watching right now. Look, your entry would be somewhere right here. Okay. Your stop loss would be right here, right above the VWAP. Okay. Your profit, the idea is for it to make a new low. So your your win to loss rate, your win ratio is here. Your loss ratio is here. Okay.
Yeah, and it's nice to have the VWAP as
Yeah.
resistance there, protection.
Yeah. So
Absolutely. Yep.
you know right away this trade would be negated if one bar closes above the VWAP.
Yep.
The big mistake you folks make is you're not patient enough and you don't wait for the bar to close. Oh, it's above the VWAP, and you close it out, and then it closes below the VWAP. Let me just really quickly change my ticker symbols. And
And so, a quick question from several traders here wondering, Roger, are we trading underlying? Or are we trading options?
on this, you could trade whatever you want. You could trade
Hmm.
the options on this, or you could trade the underlying on this.
Yeah, so you could short the stock if you're doing that, folks, or you could be
Exactly.
go ahead and buying puts.
Exactly. Exactly. So again, it's just one of those. It's just one of those things. It's one of those things. Um, okay. I just have the other stock ROLR, and I'm watching it right now for when it reopens. Okay. So let's continue. But I'm just showing you, and this pattern happens every day, and it happens
Hmm.
with every support and resistance area. If let's say, so let's just say, for argument's sake, since we're on this topic, let's just say, for argument's sake, that here, I'll draw it again. I'll do it again for you guys. I want to show you. So here, this is your price is trading here. That's your resistance right there. Now, price is trading here. This is your support. It's a very, 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 very good pattern.
Hmm.
Okay. That's what we're talking about here. That's what we're talking about. Okay. All right. Just want to make sure you guys understand it. If you're a beginner and you want to try your hand at doing this yourself, what I just showed you is a very, very low risk type of strategy. Very low risk because your risk to reward is always right near the support and resistance area. So you know that if it gets above or below, depending on what side you're on, you're out of the trade. I'm going to tell you right now, the best traders, the best traders I know, they they create scenarios for themselves where they have risk to reward ratios that are always skewed to the buy side. Okay. Always skewed to the buy side. Like when Omar does a trade, he'll always tell me what his reward, and I'll show you. Let me just show you. I don't think he minds me showing you. This is a trade that he already completed. I'm just going to give you an example.
Great. People are
I hope you
loving this,
guys
by the way,
I hope
Roger.
you
They're
guys don't
loving
mind.
this. No,
Everybody's
no.
liking. So here, this
Oh,
is
yeah.
an email I got from Omar. This is a trade that he closed. I'm showing this because he closed out, and I happen to have it right here in front of me. So he's shorting John. What was the stock he was shorting? Johnson and Johnson. He was shorting Johnson, or no, or he was going long Johnson and Johnson. Okay, He went long at 217.38. His profit target is 219. And here's his stop loss, and here's his risk to reward ratio. And he tells me, he writes it down. I'm making him write it down for me every time he places a trade. So there's no monkey business. Sorry, Omar. The only reason I showed that is because I know you're already done with the trade, and we were talking about this right now. So
By the way, several people did well with Sedge.
Sedge, good. Now,
Yes.
1 second. I gotta add. I gotta tell them I gotta add a little more. Hold on. We gotta add. 1 second. 1 second. Okay. So I would add to ROLR right now and put my stop loss to 1789 for all positions. Okay. Okay. Again, I'm just showing you how it works. And and I'll tell you this, folks. If you want to learn how to trade fast, like not learn how to trade fast, but like learn how to trade in a very short period of time, small caps will help you because you're forced to kind of be you're forced to make decisions very quickly. And when you start trading large caps afterwards, you're like, yeah, what? You want me to adjust it if it goes down 4 points? Okay, yeah. I think I can do that. So it's a very different world. But you have to be extremely patient, and you have to always understand you can't look at small caps every trade. You got to look at every 100 trades. So that's how it works. Okay. Now you see the stock we were looking at. You see how it went to the VWAP,
Yep.
and they see how it's breaking down right here. So look, you would enter like right here, right here. Your stop loss would be like right here, and your profit target would be like right here. This is the stock we were just looking at before. Which is playing out exactly the rhythm that we thought it was going to do. Now, if this was to come up here right now, you just get out and close above here right now.
A quick comment from Adam, basically saying that he hates to admit it, but these Fed speakers, can be spooking the markets. And we had 5 on tap today, Roger. We had 5 Fed people coming in and talking today. So, folks, that's why they're part of our catalysts,
Yeah.
and it's just something to pay attention to. And
Exactly. And again, this whole thing with Iran, and the whole thing with not knowing when the Fed is going to come out with this news. Can you imagine if you're a business right now and you're trying to make a decision and you're trying to wait for the Fed to come? Do you remember right after President Trump? This is not political. I'm serious. Don't get like all bent out of shape. But do you remember when right after the election when President Trump was talking during market hours and like every like people were dissecting every word that came out of his mouth, and they were like, "What's he saying? What?" And then the market would just go crazy, and then it kind of stopped after a while. Well, this is kind of the same. This is kind of the same thing in reverse. This
right.
is the same thing in reverse, right? Because think about it. So the markets are reacting again. Like, what are we going to have these tariffs? Are we? It's a matter of several companies deciding whether they're going to be alive in the next 6 months or not. I mean, and again, I'm not trying to get into the whole political aspect of it. I'm explaining the practical aspect of it, the way we've seen it happen. March, April. Remember all that when you guys remember, everybody remembers. And again, I'm not trying to be political here. It's just you remember it wasn't that long ago. It was less than a year ago. So that's kind of what we're kind of revisiting that, if you will. Okay, let's continue. ZH. I'm giving you guys really nice stocks, okay? Like really nice shorts. Real nice shorts. The question is the market going to continue going down or not? But these shorts are fantastic. Okay. Hubs. By the way, speaking of which, same thing. Look, came here, went here. Now here you would have been stopped out. You would have been stopped out unless you entered on the way down from this bar. somewhere right here. Okay. Just FYI. Okay, let's continue. GWRE. Nice short. Again, very, very nice short. All of these shorts that I'm giving you today are very, very nice, and most of them have very strong, excuse me, very weak strength. They are very weak compared to the market. They have relative weakness to the market, so they should move pretty well. Okay, they should move pretty well to the downside if we have continuation, but I am not so certain of that because again, market internals are not really bad. I mean, ADD is at 150 right now, and we're at the bottom of our range, which is I think why Matt is trying to get in on an S&P trade here because we're right at the bottom of our value area here, and it's not easy to break this level. So it seems to me like we may be turning around and going a little higher sooner than later. So again, market internals are not bad. Things are not looking that bad. Right? Okay. Let's continue, please. Long side now. Long side. Baidu. Yes, Baidu. CTSH. Now, I'll tell you something right now. If a stock is moving up right now, okay, if a stock is moving up right now, there's definitely some institutional interest in it because markets are not that strong right now. So it's easy to find. If you find a stock that's up more than it usually is, the odds are institutions are buying it. And if there's volume behind it, even that much more so. HL, I don't like it as much as I like this morning, but I know Matt's going to love it when it hits the 8-day EMA here. So we'll keep we'll keep an eye on that. SATs. This is a nice stock. It's a very, very nice stock. Very, very nice. One second. I got to check where my profit target is real quick. Let's see if we hit it. All right. AZN. That's a nice looking stock right now. Not overextended just yet. Not yet. One second. Okay, I just told them to take profit on a position. Okay, we're down. We're out. All right. Next one is RTX. Nice. MT. That's a very nice stock. I'm really trying to give you guys red meat today. Okay. One second. I just got to let them know if.
This is great, guys. I mean, Roger and Matt are multitasking here. This is an absolutely live presentation, but they're also managing trades in real time as well.
Yeah, I'm showing folks right here. So here, right here. So let me show you what we did. I'm just going to show you what we've been doing in the last hour. I'm showing you what we're doing while we started this room. Okay, so I placed a buy stop on ORLL to add to a position which we originally got into earlier today on a buy stop that I gave folks in the morning. It's going to reopen in about 8 minutes. So I gave folks instructions early in the morning. Enter a buy stop on ROLR at $20, okay? All right. So they entered the price. They got in at $20. I said profit target is at $25. Okay. I told them that at 9:28 in the morning. Then, then all of a sudden, your buy alert on ROLR should have been triggered at 11:40. Okay. Put a stop loss at 15:50 and a profit target at 26:30.
Wow.
Okay. I'm ambitious. What can I say, Raleigh? Then I say, it's not enough. I'm aggressive. I'm a shark. Then I say, put another buy stop, enter again at 22:33, add to your position, and then raise your stop loss from 15:50, which is originally we gave them, to 17.89. You see, it's right here. And then we went long SCGG at the same time. A stop loss, here's your stop loss on SCG. Here's your profit target. Profit target met on SCGG. We're out. Some of you got out at 130. Okay. I would add to our OLR. See that we added at 22. So we got two positions on our OLR, one at $20 and one at $22, right, Raleigh?
Yep.
And then I say, put all of your now that we got into the other position, raise your stop loss from 1550. Now that we got two positions, raise them both to 1789. They raised the position to 1789, and guess what happened? This is what happened. Remember you said I was a little ambitious with my profit target?
Yeah. Well, with the stop loss too, I love the spread. Yep.
So,
Look at
and
that.
you know what I did? I told folks, get out. 24.61. So they only made about 25%. They made 25% on the initial position, and they made 25% return on their money with a stock on their initial position, and on the second position, about 15% on the stock in about 15, 20 minutes. Let's see where it reopens. It may open even higher, but I would just say people are not, no one's complaining. Let's put it that way.
No, not whatsoever.
Nobody's complaining. All right. So I'll let you know where it reopens. Sorry, folks. This usually we're done with all these shenanigans by like 10:30. This is very unusual in a good way. And the halts last for 10 minutes. Let me ask you, Raleigh, am I being too all over the place on this session, or are people liking
No,
this?
once again, Roger, I don't think you have a choice for a couple of reasons. Number one, you're managing live trades, okay? So we basically can't ignore those. What I really like, though, is you're sharing with everybody here in the room what you're doing, okay? Regardless if they're in the program or not, you're kind of sharing what's going on. And it's, as you said, Roger, we're an ongoing soap opera. You come day in and day out, day in and day out, day in and day out, and the fundamentals are the same. It's just, what the market conditions are, what pricing is doing, the stock, that's what's different. And you're just reinforcing things. So people are loving this, Roger, absolutely loving it.
Oh, it just reopened. Okay, so they're out. They're out of the position.
Yeah, and for those of you that are wondering, the High Flyer program, that's a separate program. It's got a dedicated private Telegram service associated with it, and Roger manages that, and the pit. Those are Roger's babies, the High Flyers and the trading pit. And each one has its own, private Telegram service. And then Roger will share here in the VIP room, those trades that have occurred, things that have happened, what he sees. Roger, I think it's perfect. And people have to recognize this is not a structured lecture you're giving. This is just
I'm
this is a midday a midday update as to what's going on in the markets, what you see, trades that you're taking, opportunities that are there. And at some point in time, we're going to talk about seasonality and data analysis and other tools you use.
Yes. As a matter of fact, let me finish. I have one more long to show you. EL. I like this long. Sorry, folks, I didn't mean to get into all of that. And I want Matt right now to do a little walkthrough and show you. So this is what Matt's going to show you right now, okay? I've built into data miner, okay? Sorry, folks, I did not mean to get off the reservation with all of this, but we just managed and closed two small cap winners while we were here live with about 600 people, and it was a lot of fun. It was a lot of fun. I wish, if they set up during the day, like at 12, Raleigh, I'd probably make like a twice a week live trading session. But, what are you going to do? All right. People gave me some thumbs up. People took profits. I'm happy to hear that. I don't know. Again, my chat is closed. I don't know what the feed is, but looks like we did pretty good here.
Oh yeah. Oh
Looks
yeah.
like we did pretty good here. And if you
Absolutely.
didn't
And
get
for
out, it's
people,
back.
one last question on the high
Yes.
flyers, folks.
Yes.
We are just trading the underlying stock. We're not
Yes.
trading options here. Many of these don't even have options. So we're just, the shares are cheap. They're between $1 and $20. So you
Yeah.
decide how many shares you want to buy and you rock and roll with it. And they're all listed. These are not over the counter stocks. These are all listed on the New York Stock Exchange or on NASDAQ.
Yeah. It's now at 24, just FYI. Okay. So they could get out right now, right near our top price right now if they wanted to. I'm just wanted to let them know. Anyway, that's what we do, folks. That's what we do around here. So I like these stocks seasonally, as Matt and I pointed out to you guys beginning of this week, we have a lot of we have a uh, we have a lot of mixed seasonality over the next few days. But what I want to show you is this. I use this so much. I use this band here so much, these bands, that I use these bands so much. I rely on these so much that when I created the new version of Data Miner, I told Matt and I told my team, I want to put this into Data Miner. I want folks to know what I'm looking at in terms of what option I'm looking to buy. And I'm looking to, so basically, I programmed the type of option I buy for a swing. And I don't want to give a trade if we're closing above this area. That means we're overextended. And Data Miner does that for you automatically. Now, Matt is going to go ahead and share his screen right now, and I'll take it back from him. And he's actually going to show you and demonstrate it. Okay, can you do that, Matt?
Yep.
I'm looking at the chat, by the way, now. So if you guys want to communicate to me, that's fine.
So that's the data miner dashboard.
Yes. Yes. So go ahead, Matt. Do your thing.
What do you want me to do first?
Whatever you want.
Does
Whatever.
it just a full walkthrough?
Yeah, just give them a full walkthrough, and then I want to make sure you explain to them the option, the 5-day hold, the 10-day hold, and more importantly, how we track our stop loss and the formula we use for the profit target and stop.
Okay. Just to be clear, you're talking about on the. I got you. I understand now. You threw me off with the stop loss, but
Forget about the stop loss.
well, I know where it is now.
Yes.
All right, so we have all our different lists. The first distinguisher is ETF and S&P. S&P is kind of an outdated term now because we have more than the S&P in there. We have over 3,000 stocks, I believe. So we have the Russell 2000. There's some overlap in these, but the Russell 2000, the Russell 1000, the QQQ, S&P 500, the mid cap S&P or the New York NYSE mid cap and the NYSE small cap, as well as a few other interesting tickers there. And then on the ETFs, we have about 50 of the main ETFs for commodities, the indexes, gold, oil, things like that. Then we have the different tests. You have long, short, calendar, 5-day, 10-day. So the calendar is kind of as it sounds. It's like looking at a calendar. So if you go on calendar, let's see your S&P calendar. What that's just going to show you is the performance of the ticker you're on each day. So closing close to close. And then it's aggregated over all the way back to 1990 or as much stock data is available. Long, the long system buys it at the close of that day, holds it until the close is above the previous day's high, or there's a 10-day stop out. For the short system, it's the same thing in reverse. It's going short at the close of that day, and then it is exiting when either the close is below the previous day's low, or again, just 10 days, 10 market days, it'll stop itself out. Because As we found out again in recent testing, we've brought it back together. After 2 weeks, not a lot of good stuff happens with the options most of the time. You know, I'm referring to our New Year's resolution.
You guys know we made a New Year's resolution, right? No more holding stocks that are down below 50% or 2 weeks. A rule, by the way, that I followed in the pit since the start, Matt. Go ahead.
Then we have the 5-day and the 10-day hold. Again, these are pretty self-explanatory, but you buy it, holds for 5 market days, or you buy it, holds for 10 market days. So it kind of gives you more of an elongated picture, smooths out a little bit of the bumps that you might see in the calendar or the long and short system. That is how you use this part. This is the original seasonality. So the data miner 1.0 and 2.0 was mostly just this. You'll also see if you scroll down, though, we now have the top 10. So this will just pull top 10 results for whatever list you're on. You'll notice it'll change if I switch. Can't have more than one, though. They'll change over here, and then you can click on it, and it'll add it right to your performance grid. Some of the new things we have. Let's say we find a stock with good seasonality. Let's go Netflix. All right, so we like the seasonality of Netflix. It looks good. We'll look at the technical indicators grid next, and we'll see, is it near the 50-day high, the 90-day high, or the 20-week? And let's see, we're at 88.39, and we're right at the low. So we've got room. Might not be the best. We might want to see a little more momentum. So that's your check there. 30-day average volume, it is liquid. The ADX is strong. So let's say we're okay with it being a little lower because the market's pulling back so much. Let's look at the option. So we click options. Let's see if there's a suitable option.
And now remember, it does all this for you automatically. And look at the formula. It doesn't go beyond a certain ATR. I mean, I put all this I programmed all into this for you.
Right.
It looks like we found a couple, but here's our best one right here. So it'll give you the exact option. Looks like this is the February 13th 85 call, which is a few dollars in the money. Good delta, 0.63. Very small spread, 4.5. So it's nice and liquid. Open interest is good. So that's how we would do that. So in there, you got your option. Let's say, all right, well, let's say we're holding a few more things. Say we've got Netflix, if we've got NVIDIA, and we've got GE, or we want to buy Netflix. Let's make sure this isn't going to make our portfolio too correlated. So we got Netflix, GE, and NVIDIA. Now we see right here, we've got a weak correlation, so we should be okay in our portfolio. So then we'd be good to buy. We've got 55% diversification.
Mm-hmm.
Let's just go back to 1. Let's put GE in there. Should be a little more contrasted. Yeah, you get this nice Venn diagram. These are very uncorrelated.
Yes. Do you guys see how much thought I put into I put into all of this for you guys?
Oh yeah.
Matt, did you already show them if it's too overextended, that part?
Yeah, but we can go over it again.
Show them again. This is my favorite part, folks. Look at this. How about use Dollar Tree, because that's a stock that I don't know if I want to get into right now, or if I'm on the fence right now. If it's too over, let me show you why. Well, show them a chart of Dollar Tree. Just show them so they. Do you have that thing on your chart, the overextension thing? Look at the daily chart. Look at the daily chart on Dollar Tree. Look how far it is from
Oh,
Matt's.
the 8.
Yeah. The two. I mean, I could.
I got it right here.
You got it. Okay. There we go. Okay. You see how it's touching that area, but the bar is touching the high is touching. Put your mouse there so they could. Yeah. See how it's touching that like that dash colored lines, right? But it's not all the way through. The bar is not all the way through right now. So let's see what data miner says. Will it allow us to take a trade, or will it not allow us to take a trade?
Let's see here. 50-day high, 90 and 20 weeks all the same. It's at 140. So you got about $1.70 in room. $1.60.
So let's see what data miner says. Look at ADX. It tells you the ADX is very strong. It tells you the liquidity on the stock. Look how cool this is. Look how cool this is, folks. And okay, let's go to the option. Let's go to the moment of truth. I want that guy to say no soup for you. That guy from Seinfeld. I'm going to put that in there. Oh, it's still giving it to you. So it's still okay to take an option. Now, folks, if price was a little higher, these options would not be here. It would give you a nice little message. It would give you a nice little message that says no recommendations.
Yeah, no options found.
It should reject
like
the
that.
puts.
Yeah. I like when it rejects. Huh, well, it's analyzing for a long time. It took a second to get to the other ones.
Sitting there going like, maybe.
Yeah, there it goes.
No suitable options
No
found.
suitable. Matt, you gotta tell him to put in parentheses, no soup for you. If you guys think I'm kidding, I'm not.
Nazi.
No soup for you. No soup for you. Okay? Seriously, have him do that, okay? You want to look at ST? Okay, let's look at one more. Somebody said STX. Chad said STX. Let's look at STX. First, let's look at the chart of STX to see how the chart looks. So we're going to do that. We're going to put no soup for you.
Let me just write that down real quick. What was the ticker?
STX.
STX. Seagate. Yeah, it's okay. We're off the 90, 50, 90, and 20-week high. We have liquidity. Average volume is good. ADX is strong. Let's check our option.
Very interesting. Very interesting. Yep, it's giving them. Still giving the options. Still has them. Oh, Chad met STZ. STZ. Let me see what STZ is doing. Here, I'll take a look at STZ real quick.
It's coming right up to the 200.
Oh, okay. So it's not okay. But I wanted you guys to see. What do you look for trade calendar spreads? Show them the time spread function. So, folks, for time spreads, I look for.
You're jumping the gun a little bit.
Sorry, Matt. Go ahead.
Because we need to have something that has earnings coming up.
We got to have something that has earnings coming up.
And we can scroll right down and look at the tickers with earnings in the next 5 days.
There you go. We just added that recently. So you already know what stocks have earnings. So you take them through it. So, I'm gonna be quiet for once.
Let's look at GS or Morgan Stanley. Let's look at GS.
I love this time spread function. It's so cool.
Right. So it's strong. Just kind of explains what it is. IV is good this week versus next week. It's close to double.
This IV ratio, folks, you want it to be at least 40% higher, and it's telling you it's 1.77. So it's more than 1.4, obviously. So you have a good ratio, IV ratio spread. And explain to them what the success rate is.
The success rate is showing how many times the stock stayed within the volatility range after earnings, at least the day after earnings.
91.4%. Wow.
So, folks, you know how every morning during earnings I give you I show you and I say, okay, here's the here. Here. Matt, show them this sheet right here. I'll just give it to you in Telegram. I mean, in Teams. Folks, this will help you put 2 and 2 together right now, okay? And then I want to start the class because I want to run out of time. I'm very excited about this. Very excited about this. Matt, where are you in my Teams? There he is. Go ahead and just show them this document, would you? Okay. You see this number, you see the numbers next to the stock, the earnings date? That's the expected move as priced into the option. You see the numbers right to the right of the ticker symbol? We collect those numbers for a minimum of 20 quarters. As of right now, it's every stock in the S&P 500. After this Thursday, it's going to be every stock that has options on it.
Oh my gosh, Roger.
Juarez confirmed yesterday that this Thursday he'll have them all scraped. Hence, now listen and listen good. So let's say a stock is priced at, listen and listen good. Let's say a stock is at $100, okay? And let's say you see DAL, Delta, DAL, it has 6.8% Tuesday, DAL. So what the option is telling us is, the implied volatility is telling us is that it can move $6.80 either up or $6.80 down. Okay? That's the range. What if you knew that in the last 20 quarters, Delta only moves 3% on average? We got that information. Matt, go back to DataMiner now. That's what we have. You see the success rate? You see the success rate? That's telling us over as far back of a history of earnings, how often the price stays in that range. In other words, 6.7, 6.6, 6.5, 6.4, not 6.8 in each direction. That means it moves less than 6.8%. You understand? Now, if it moves less than 6.8% this quarter, and let's say last quarter the expectation was 5%, it only moved 3%. And let's say the quarter before that the expectation was 4%, and it moved 3%. You understand? That's what that 91% success rate is. That's telling you that 91% of the time, the stock's implied volatility is too expensive, which means if you buy an option, you're going to lose money 91.4% of the time in the last 20 quarters minimum. Okay? That's telling you how much it stays in the range. So now think about those two numbers together. Now think about this. We want implied volatility on this week's option, the one that we're selling, to be at least 40% higher than the one we're buying. And we want the move to fail over 80% of the time. That's what market makers use. Now, you're probably thinking, gee, Roger, that sounds like information that everybody would want to have. Yeah, it is. You know how available this is? It's not. You can't find it anywhere. It's so unavailable that we had to hire a Polish guy to scrape it with a scraper so we can enter that data into this machine. And if you think I'm joking with you, I'm not. We couldn't buy it anywhere. Okay. So this data is a gold mine. Okay. That data is a gold mine. All right. Matt, unshare your screen. Thank you for that. So this gave you a real good idea of all the different things DataMiner can do. Seasonality and time spreads and correlation. Okay. Which is really, really, really nice. Okay, so if you guys are interested, if you're interested in learning more about DataMiner, I'm going to do a class right now. is the last day. I know that for a fact because they told me today's the last day. This is the wrap-up date. I'm going to share my screen with you. Having a really good session today, folks. A lot of impromptu stuff, but
that's how we roll.
well, I mean, what's better than live trading, right?
Yeah, exactly. Exactly. And folks, for those of you that are with us on YouTube, we're about to close YouTube because YouTube doesn't allow us to do any promotions on YouTube or play music or fun stuff like that. So please come over to the Zoom room if you would like to be a part of the rest of this presentation. For those of you that are already here, you're already in the chat, you don't have to do anything at all, okay? Nothing at all whatsoever. You're already here. But for the Zoom people, please come on over. I also want to let people know, because a lot of people are so fascinated by what you just did. Guys, all you have to do, and I posted it, the morning show and the VIP trade room, those replays are available on Roger's YouTube channel in real time. And you see the link there. So if you'd like to rewatch that, it's already there. You can go through that. And Roger, people have asked us if it's possible to snip that section out and maybe even put it in the members area. We could talk to Deanna
for what
about
program?
For the data miner. In other words, what Matt just went through, that quick little review that he did.
Yeah, sure we can.
On how to use data miner. And
would you mind doing it? Would you mind letting her know?
Yeah, I'd be glad to do that.
Thanks. But I don't know when we started. We stopped right around 1 o'clock.
I'll figure that out, and we'll take that with it.
Okay.
But I thought that was it's just a quick little section. Matt, thank you so much for going through that.
Yep.
Yes.
Sorry,
all right,
I'm
folks.
losing my voice.
Yeah, what are you losing your voice for? You never speak. I should be the one losing my voice.
I don't know.
We're gonna have to exercise the do re mi's, Matt. We're gonna have to have you sing
in
out
the morning.
loud. Sing in the morning. Figaro, Figaro, Figaro. All right, folks. Let's begin. And folks, you better have a piece of paper and a pen because I'm going to be giving you red meat or red tofu, whatever you want to call it.
Red cabbage we came up with.
Red cabbage, yeah, red cabbage. I'm going to be giving you real seasonality dates during this class.